My name is Alex Mazer, and I'm the co-founder and co-CEO of Commonwealth. If this is your first exposure to Commonwealth, or we've been partnering with you for some time, we really do appreciate your time. And we hope that today's panel will be helpful to you in growing your business, adding value for your clients, and helping you to adapt to a rapidly changing environment. I have to say I'm especially excited for today's panel because it's a topic that's near and dear to our hearts, which is really the future of retirement technology. We, as a business, are obviously extremely bullish on the potential for modern technology to improve retirement outcomes and expand the market. And we also believe that your work as advisors and the business of group retirement in general will be increasingly shaped by technology. Gone are the days when clients are looking to advisors only to help them to choose investment funds. Increasingly, we hear from advisors that clients are expecting you to help them evaluate technology platforms, user experiences, digital advice capabilities, cybersecurity, and other dimensions that require you to have a deeper understanding of technology. So we hope that this session will help you better navigate the choices that you make and that you help your clients make when it comes to the technology behind group retirement. I'm thrilled to introduce our panel. We have an all-star panel today of people that are really very well positioned to speak to you about this topic. First, we have Matthew Lawrence. Matthew is a partner at PwC and Canadian Insurance Practice Lead. He has extensive group retirement consulting experience with a number of industry leaders, including both carriers and distributors. He also has 10 years of experience in the benefits brokerage and consulting space. So welcome, Matthew. We have Phil Zalewski, Commonwealth's own Chief Technology Officer. Phil has nearly 20 years of technology experience at both startups and large enterprises. Prior to Commonwealth, he led engineering for HubDoc, an accounting fintech that was later acquired by Xero. So welcome, Phil. And last but not least, Nicole Weber. Nicole is Commonwealth's Senior Director of Product. She has over 20 years of group retirement experience with a focus on digital product development and was a digital product leader at one of Canada's major insurers before joining Commonwealth. So thrilled to welcome the panel. We're going to start off the discussion with talking a little bit about how technology is changing the role of advisors. And before we jump into it, I just want to share a couple of findings from a recent survey that was done. This is in the US, but it's for a survey of advisors that work with small and medium employers on 401ks and group retirement plans conducted by a retirement tech company called Vestwell. And just a couple of the highlights from that survey. 85% of advisors said they place a greater emphasis on technology to run their practice than they did a year ago. This was conducted in 2021. 93% of advisors believe that working with a tech-forward record keeper will make it easier for them to manage their plans. 73% of advisors agree that their clients care more about cybersecurity than they did a year ago. And 30% of advisors listed cybersecurity as a top concern for the future of their practice. So just a couple of interesting statistics coming out of the US. Maybe I'll start with you, Matthew. I mean, you've run your own brokerage. You're now a consultant to some of the leading players in our industry. How would you say that technology is changing the role of the group retirement advisor?
Yeah, thanks, Alex. I think when you think about the role that advisors actually play, I kind of think about it in three key areas, right? So first and foremost, it's providing advice on plan design, vendor selection, best practices, auto enrollment, contribution amounts, et cetera, in terms of actually setting up an overall plan. Then it's the second area is really around providing support to the plan sponsor, both in terms of setup and ongoing administration. And then really kind of the third key area is plan member support. And that includes education, awareness, advice in terms of the solutions that are available to them. And so when you think about it in the context of those three areas, I think technology is going to play a key role in all of them, right? So I think you touched upon a little bit around, just even in vendor selection. Advisors need to be aware of the platforms that are available to their plan sponsors and their clients. They need to be able to make recommendations based on best practices and where the market's going and based on client needs and expectations as well. And then from a support perspective, technology can really play a key role in, I would say, making their lives easier. So if it's easier for our plan sponsors to onboard, to administer, that's obviously going to have an implication to the advisors as well. And then thirdly, as it relates to plan member support, I think what we're seeing across North America more broadly, but increasingly there's an opportunity to provide more holistic and comprehensive advice that's being delivered at a more personalized level. And if you think or if you look at some examples coming out of the US, Empower, partnering with and acquiring Personal Capital as an example, you are seeing more kind of wealth management like capabilities being delivered to plan members. And so I think really across the continuum of the business in all of those different areas, technology is going to play a key role for the advisor going forward.
Yeah, I like that framing too, because it really goes through the entire life cycle of kind of a group retirement relationship. What would you say, just back to you, Matthew, in terms of what are the risks for an advisor of kind of not staying on top of the latest technology trends?
Yeah, I mean, I think it's pretty simple, right? There's a risk that you can be left behind. I think given changing demographics, client expectations, the acceleration of digital just post-pandemic environments in general, I think if we're not up to speed on the latest technology advancements, our plan sponsors are going to be expecting that, as well as they're looking for opportunities to really drive a differentiated experience for their plan members. And so I think if the advisor population isn't necessarily up to speed in terms of the trends and what their clients' expectations are, and then more importantly, the solutions that can deliver against those, there's a tremendous risk that they're going to be left behind. And increasingly, I would say that those that are embracing technology will have a differentiated value proposition, not only from an overall kind of positioning with sponsors, but those that also leverage technology can create efficiencies on their own practice areas as well.
Right. So there's an opportunity for the advisor. There's the risk side, but there's also the opportunity side. And I like the point you made as well about how customer expectations are being shaped by trends outside of the group retirement space. Obviously, it doesn't operate in a silo. As people are having changing experiences across other parts of their lives, that's going to carry over into what they expect in the space that we're in. So just turning to you, Phil, to talk a little bit about how the technology landscape has really unlocked the potential for innovation. Could you talk about some of the big changes over the last 10 years, changes in the technology landscape and how that's changed what it means to be in the kind of retirement and record keeping space?
Yeah, absolutely, Alex. I think there are two big changes, and I'll start with the first and the second and then kind of tie them together. The first is the kind of introduction and wide scale adoption of the cloud as a way of delivering services. I'm talking about things like Google Cloud, Microsoft Azure, Amazon Web Services. All these platforms allow you to deliver applications in very cost-effective ways that may have been impossible or just not even widely accepted 10 years ago. If you're starting a company today, you just don't need to make massive capital investments in physical infrastructure, and you can really focus on the business problem that you're trying to address. Following on top of that, there's a growing ecosystem of tools that are embedded in what we call the software delivery lifecycle, how you get a feature from an idea into the hands of a user, whether that's an advisor, an employer, or a plan member. So if you go back 10 or 15 years, if you were shipping a new feature, you might need a review from a security team. You may need several rounds of manual testing. You may then need to schedule some downtime to get that code deployed into a production system. So taking a new feature and building it and then making it go live was a very costly and complicated affair. Contrast that with a more modern platform. The bulk of the testing is automated. A lot of the security analysis is happening in real time as developers are writing code. Releasing features to users can now be done with no downtime. So you don't need to tell users, hey, the application will be unavailable tomorrow. And all these things used to be done manually. They're now incorporated into the software development lifecycle. And I think coupling those two aspects together, the recognition that the security and scalability and delivery capabilities of a modern tech stack are just way more sophisticated than what organizations could have done on their own 10 or 15 or 20 years ago. Any company starting to build with modern infrastructure, modern security practices, and a modern stack is one that can really rapidly respond to the evolving needs of advisors, employers, and plan members.
Yeah, what's really interesting about that, Phil, is it's not just, I think sometimes people think of the cloud and they think of storage. Hey, I'm just going to move all my data to the cloud. But the advent of the cloud is really about much more, what you're saying, much more than that, right? It's a whole level of infrastructure that now new companies don't need to build anymore. I mean, they can leverage these massive multi-billion-dollar investments that have been made by these major players, so that they can focus on really the customer value creation that they're best at, and leave the infrastructure stuff to these really innovative developments that have come to market in the last decade or so.
Yeah, that's really well put, Alex. I think it's the ecosystem of tools that allow product teams and engineering teams to really get at the root of what the customer problem is, and spend less time thinking about the mechanics of how to get it into the hands of the customer. And when you have security built in, and you have testing built in, and you have scalability built in, that really frees up teams to focus on customer problems and customer needs.
So both you and Nicole are in the unique position of having to work both in a kind of legacy environment and in a more modern, technology environment. And just for the benefit of folks on the call, when we say legacy, we're not talking about estate planning. We're talking about an older technology system that was built, 20, 30, 40 years ago. It's often referred to as a legacy system. So how would you contrast, some of the key differences between being in a legacy environment and being in a more modern environment that was built, called in the last 5 years or so?
I think there are a lot of technical changes for sure, but I think what those technical changes drive towards is an increased pace of delivery. I think people understand that you want to deliver functionality to your users, you want to capture feedback, you want to make sure that what you've envisioned and what you've delivered is working, it's meeting a real need. And so, when I started my career, if you were at a company that was releasing monthly, that was really good. Most companies released quarterly, maybe they released twice a year. And that wasn't because these companies were bad at building software. What was happening was you'd have teams that would build functionality, and then you'd have to go through many rounds of security review, many rounds of testing, many rounds of additional security review, maybe some infrastructure review. All that stuff is now happening in real time. As developers are writing code, tests are being run against that code. Security analysis is being done against that code. Little bits of code are being shipped into production environments. They can be turned on, that we can target who we turn features on for. So we can say, hey, we have a small beta group that we want to try something out with. We can enable that for them without turning it on for a wider audience. And so as that stuff becomes incorporated into your daily workflow, the line of sight from a product vision and engineering implementation and getting something into the hands of the customer is a lot clearer and a lot faster. And I think what we've learned is that fast feedback loop allows us to respond to feedback and make meaningful change that ultimately solves the real problem that customers and members have.
Now, turning to you, Nicole, because I think everybody in the industry grasps the importance of digital transformation, right? They understand the importance of digital, as Matt, outlined at the beginning, but it can be hard, right? If you're operating in a legacy environment. So could you talk a little bit some of the challenges when you're trying to innovate, as you have throughout a lot of your career, but you're operating on an older platform?
Absolutely. I mean, many of the legacy companies, their platforms are very complex and often have many systems, and they're built on older technology that's harder to support. And then years later, they came along and decided to build websites on top of these older technology systems. And they were generally built at a time, I say, using something technology-centered design. The websites were generally built based on how the data was stored in the back end and the features of the product. They weren't built in a time where you thought about how the end user is trying to use your product. What I see that's great with Commonwealth's modern technology platform is that we've been building out the front and the back end together from day one and started as a digital first company. So when we build these experiences out, innovation is easier because we can design experiences based on the needs of customers, and we're not handcuffed by our back end system limitations. It just allows us a freedom to design holistically, like Phil mentioned, to solve customer problems.
Yeah, it's an excellent point, Nicole, because I think that often when people in our industry think about digital technology, right? They think about the front end experience, right? And they're looking at the front end experience. And obviously that's incredibly important. But part of what you're saying is there's an entire back end infrastructure behind that that can either limit or enable innovation on the front end and for the customer that isn't always obvious to people. And that's part of the purpose of this session, is to kind of peel back the onion a little bit on, what is technology, to help, our advisor partners better understand that it's actually not just about front-end experience or an enrollment experience, however important that may be. It's about what's the technology infrastructure that you're using and your clients are using. So I guess turning back to you, Matt, we hear a lot of discussion, from major players in the industry about digital transformation. What has that typically meant, like over the last 5 or 10 years? Like, what are the major players in the industry doing when it comes to digital transformation?
Yeah, it's a good question. And Nicole, I'll kind of piggyback on something that you referenced, right? Given that, these large legacy providers have these old legacy systems, what's happened is it's not just the technology that's legacy, it's the way that they've architected their operating models in the back end is extremely complex, which requires a lot of manual effort, handoff between multiple teams, data is everywhere. And so when you actually think about digital transformation and being able to, what I would say, really modernize an environment, it's very challenging and very time consuming and very costly, because essentially you have to change all of that, right? It's not just we can slap in a new system and there we go. It's the way they've architected their business is overly complex. Yeah. And there's a reason for that, but that's just the reality. And so when we think about digital transformation, what we've seen over the last 5 to 10 years, no one's really, in Canada yet, no one has really put their hand up in the air and said, we're going to completely transform our organization. What we've seen primarily is more what we'll call digital wrappers, right? You talked about the shiny front end experience. We built out the websites, but the problem is like that what they've done is very tactical improvements to either that front end experience. Maybe they've tried to solve for a pain point or two as it relates to plan sponsors. Maybe we're trying to improve the onboarding process. But ultimately what we've seen is a very fragmented approach to trying to solve for this issue through very small, much smaller tactical engagements and programs. And so when we think about the overarching opportunity to modernize, like no one's actually really been able to enable an end-to-end client and sponsor journey that's modern, that then fully supports the back end, Nicole, like you said, that is going to drive straight through processing, faster onboarding times. And so it's been very, much smaller and much more incremental in terms of, the investments that we've seen as it relates to digital transformation. Does that make sense?
Yeah, I mean, it's well put, Matt. I mean, and it's very hard to do. I think, it's not that we're necessarily being critical here. It's difficult to completely overhaul your system, which is why, when we look across the world and think about, say, the $60 trillion of DC assets and how they're record kept, our sense is probably 95% plus, probably well over 90% plus, 5 of those assets are operating on a kind of legacy technology backbone.
Yeah, and maybe just one last thing to add there is, there's a stat that I think gets thrown out often, but 70% of large-scale digital transformational programs fail to really achieve the intended benefit. So I think a lot of organizations are, somewhat gun shy to like raise their hand and sign up for something substantial. And so you've seen a lot smaller incremental improvements over time. That's what we've seen over the last 5 to 10 years too.
So we've talked about some macro trends, and I want to bring this back to kind of the day-to-day work of the advisor, right? And try to translate this into terms that folks can relate to. So maybe starting with you, Matt, because you have a background in kind of the benefits consulting industry, right? If you were in that business and you were operating with a modern technology platform or modern technology tools, how would that change your business? How would it change your practice?
Yeah, there's a couple of kind of different threads. I mean, we talked a little bit about the role of the advisor, right, and where they play. And so I think, first and foremost, if I had a more modern solution that was much easier for my clients to sign up for, enroll, and onboard, right, that saves a lot of time, energy, and effort on my end. So if the upfront process of just onboarding and getting the plan set up, that creates a lot of efficiencies for me as an advisor. So, ideally, I would be able to then spend more time on what I consider to be the more important aspects, right? Which would be business development, relationship management, versus day-to-day administration and setting up new plans and policies. And I think the other part to it as well is it also makes for happier clients, right? If they have good experiences, they've got more intuitive, self-serve capabilities. Those are the types of things that plan sponsors want today versus I've got an issue and now I become the problem resolution individual. Like I don't want that necessarily to happen with my plan sponsor. So I think it has a tremendous opportunity to improve the advisor's day-to-day from just an overall kind of relationship management perspective and creating efficiencies. And I think the second piece to it is, this is going back a while when I was in the industry, but we also conducted a lot of in-person seminars, educational sessions for plan members, right? So really educating the plan member, and those sessions were very generic in nature. It was really more around plan education, awareness. But what we're seeing, certainly as a trend, is that members and sponsors are actually looking for much more personalized levels of engagement, advice, based on their specific needs, right? And so we're definitely seeing the trend towards offering, I would say, more personalized, intuitive, and digital tools that are going to allow for more advice-based value propositions at an individual level. And so that really does change the dynamic for an advisor, in that your plan members' needs are being better met, and potentially you can even identify a broader set of needs, right? And as an advisor, you could potentially step in and fill for some of those needs as well. So I think, again, it's kind of across a continuum of sponsors and employees of how it can actually make your life easier and better.
Well, the flip side of that too, and we hear a lot from our advisor partners, is we would love to be able to add more value and deepen our relationships with our individual employee clients, so that we can continue to serve them potentially after they leave their employer, right?
Exactly.
But we need an efficient way of doing that, and we're excited about the potential for technology to make that work easier, to embed advice in digital, to just simplify the administration. And that's an exciting opportunity because, as you say, there's a demand there and a desire for more personalized support from the plan members themselves. Nicole, I know a lot of your work in the past has involved gathering feedback, right? Gathering feedback from market sources, partners, advisors, and others about the product roadmap and features people would like to see. How would you say modern technology affects the ability to respond to that feedback with product changes?
I like to use the analogy of it's a difference between doing a renovation on an older home versus a new home. With an older home, and I'm going to use that to describe many of kind of the legacy systems, you're more likely to find surprises and unexpected expenses. You've got an idea for something that seems to be very simple, and you start to open it up, and you just don't understand how it's all connected. You don't have access to the code. You don't have that visibility. And it means you're often more likely to need to modify your starting product vision to kind of meet your technology platform. So what I love is, because our platform's so new and we've got access to the code, we know what's behind the walls, I like to say. And this really gives us the freedom as we're coming up with new ideas to let our customer needs drive our roadmap. So when we've got a change in priority, which there inevitably is with any roadmap, it's very easy to pivot. And you've heard a piece of feedback that's really relevant and timely, and to suddenly pick that piece up, put it ahead of something else and implement it. It's something that we just didn't have the luxury to do before. You then couple that with our ability to release often, means we can deliver that continuous value to the customer feedback. And Phil, I know you touched on it earlier, we can do releases regularly, weekly. In the legacy environments, sometimes you might be able to do them monthly, but often you're only seeing those, that feedback being able to be implemented quarterly. And again, that really makes it difficult to pivot. So.
Yeah, it's interesting. When we were making the decision of how we were going to build our platform, we knew there were some others in our space, like newer entrants, that decided to outsource part of their platform. Maybe we'll outsource the employer functionality, some of the record keeping, to somebody else because it's complicated to build. And a big reason why we wanted to make that investment and control that ourselves is because we could respond to feedback, right? Yes. If something wasn't working, we didn't have to go to another technology vendor and say to them, can you put this on your roadmap? Well, good luck, yes. Because their priorities might not be yours, right? Yeah. We can go to our own team of product leaders and engineers and talk to them about the feedback. And sometimes they listen to it directly from our advisor partners, which is just extremely valuable. Phil, just want to come back to you. You talked earlier about the kind of ecosystem of tools. And I guess another ecosystem that's really important in the group retirement space is the HR ecosystem, because obviously group retirement systems need to work closely with HRIS and payroll systems. You've got a really strong background in that area before you joined Commonwealth. What opportunities do you see for modern technology to connect to other parts of the HR ecosystem?
Yeah, thanks, Alex. It's a very good question. And let me just back it up, just reflecting on my own experience back at HubDoc and Xero. It's clear that people want systems that work together to talk together seamlessly. In the cloud accounting space, accountants and bookkeepers, they wanted a unified general ledger. They wanted their bank transactions automatically reconciled with receipts and invoices so that they could spend their time having higher value conversations with business owners. They didn't want to chase them for receipts and bank statements. They wanted to talk about planning, analysis, kind of forecasting for future growth. And I think exactly the same thing applies in the retirement space. The more that systems can talk seamlessly to each other, whether that's Commonwealth integrating with an HR system or Commonwealth integrating with a payroll system like we've done with Intuit recently, that frees up advisors to have conversations with employers and plan sponsors that are actually about the benefits that are being offered to their employees, which is, I think, where people want to spend their time. People don't want to spend time talking about file upload issues and file formats and that kind of thing. People want to talk about high value, meaningful things. Is this the right benefits plan for my staff? Is this the right plan design for my staff? We're looking to grow next year. What do you recommend I do? And so I think those integrations are really powerful because they free up business leaders and advisors to actually have those substantive discussions and not waste time talking about kind of mundane technical integration issues. So we've built our system to be API ready, where we can very quickly intake new information from payroll systems and HR systems. And we're looking to see that ecosystem in Canada evolve. I know Canada is a little bit behind the US in that regard, but we're really keen to take advantage of players in the HR and payroll ecosystem so that we can create that kind of seamless, unified workflow for them.
And I think it's really important for people to understand, because often the term integration gets thrown around. It's a very broad term and it can mean different things. And often in our space, people talk about a payroll integration, but actually there might be manual work happening behind the scenes, right? Traditionally. But with the API, maybe you could just describe what the difference between, call it a traditional, maybe SFTP-based integration and API-based integration. I don't want to get too technical, but it's an important distinction in terms of what it actually means.
Yeah, that's a great point, Alex. So, when we build out our integrations, like with what we did with QuickBooks, for example, those are real-time integrations that pull data in and respond to events in real time from your payroll system. An SFTP integration, there's some degree of automation there, but there's usually still a person that's taking a file from one system and translating it into a format that can be read by another system. The ability for those systems to give feedback to one another is limited. So, if there's a payroll entry that doesn't correspond to an employee's pay, you want to be able to act on that immediately and tell the employer, hey, it looks like you made an error in a contribution here. You should really take a look at that. With a lot of these SFTP and let's call them legacy integrations, that feedback loop is still missing. So you're still not able to give plan sponsors and employers real-time information that they can act on. A lot of that information is hours or days or even weeks out of date.
That's great. Matthew, come back to you. Could you comment on the relationship between fees and commissions? I mean, this is obviously an important topic for our industry and our advisor partners. What's the relationship between fees and commissions and kind of the nature of the technology platform?
Yeah, I mean, I would say, generally speaking, what we've seen in relation to fees and commission is there's been a bit of pressure, right? In terms of, we are seeing a downward trend in terms of fees and commission levels, particularly in the larger group segments, for sure, plan plan sponsor segments. But I think what's important is to highlight that what are plan sponsors looking for, right? Increasingly, plan sponsors are increasingly demanding. They're looking for better employee communication and education. They're looking for lower fees, right? Which then translates again to potentially lower commissions as well. More retirement expertise, better investment portfolio, et cetera. And so when we think about modern technology, if we are going to see a fee compression happening, then it's extremely important to get efficiency somewhere else, right? So if we're going to have reduced compensation or commission potentially, it's going to be important that we make that up somewhere else. So having a more modern platform to drive those efficiencies, particularly around the plan administration, is going to be increasingly important. But then secondarily, if we've got access to a broader set of potential, clients, members, creating a longevity in terms of the relationships that we have with those individuals as we identify a broader set of needs, that's also going to help in terms of how we think about offsetting some of those compensation challenges as well. So I would say as we continue to modernize our platforms, there's opportunities to really leverage that in offsetting some of what we're seeing in terms of that compression, if that makes sense.
Right. It kind of goes back to what you were saying earlier. If you can free up time as the advisor to serve more clients or serve individual clients more deeply, then the technology is helping you do that. And that maybe partially offsets or maybe more than offsets, the fee compression that we're seeing to allow folks to drive increased revenues.
Exactly.
I'd say the flip side of it too, from a provider point of view, is, because we're able to automate things. I mean, Phil gave a good example with API-based payroll integration, a fully automated solution. That allows us to lower our costs, and we can pass those savings on in terms of lower fees. So sometimes people say, well, why are you able to offer considerably lower fees than the major insurance companies? A big part of it is the lightweight nature of our technology and the ease of automation and straight through processing that are much harder to do. So we can spend less time on the paperwork ourselves, right? Just as our advisor partners do. And that allows us to pass those benefits on. So when you start working with a provider, or you're recommending a provider to a client as an advisor, you're not just making an assessment of that platform today, right? You're making a recommendation for the future, in a way, a bet on the future, because that client's going to be using the plan or the platform for at least 5 years, sometimes 10 or more. So I want to talk a little bit about the future and how each of you sees it. Nicole, we talked a bit about payroll integration. We've seen a lot more of that in the US. With this becoming this two-way integration that Phil's talking about becoming more of the market standard. What do you think? Do you think that's going to come to Canada as well? How do you see that?
Absolutely. I mean, the need is already here in Canada. I mean, there's no other task that our employers spend more time on than payroll administration. It is just such a time-consuming and repetitive task for most of our businesses. And it's not necessarily where they want to spend their time, where they're adding the value. But I think the main reason we haven't seen this it hasn't been as popular in Canada, is more of a technology issue. And I think that goes back to a lot of the legacy providers. I mean, API integration is challenging and time consuming when you're on an older platform. They're still focusing on converting their internal technology to API integration inside, and have not yet been able to look at, now how do we take that and how do we integrate with other companies, external companies. So one of the great things when I look at our platform here is it was built right from day one with ideas like payroll integration in mind. So, I look at, when I started, the ability, when I look at the Intuit, the QuickBooks integration is such a first within Canada that it's now integrated with our Commonwealth RSP. And, payroll integration, it's something that needs to be really customized to each provider you work with. So it's, again, that ability with a modern tech platform to be able to easily kind of modify what you might build right now for Intuit and say, now how do we take that and easily adopt that to the next payroll providers that that our clients are using. So
that's great. Thanks, Nicole. Phil, when we think about the future of record keeping, because people often refer to our business as record keeping, we think of it as much more than that, but obviously it is very important that we keep accurate records. Can you talk about how you think the management of record keeping data is likely to change over the coming years, and how kind of technology is likely to kind of affect that?
Yeah, so I think I think there are two parts to it. I mean, I think there's certainly, there's the ecosystem and the regulatory landscape that I'm keen on increased integrations, and what I think that unlocks for people is more higher fidelity data with which to offer kind of very precise plan design and really meet people where they are in terms of their needs to save, whether it's the employer or the member themselves. But we live in a world where we have incredibly targeted advertising. Like, you may get ads today that tell you what color of stationery you want to buy. I think if we can integrate with payroll systems, if we can integrate with the CRA, if we can have deeper bank integrations, we know what stage somebody is in terms of their life. Maybe their kids are, have grown up and left home. I think the more that we can pull that data in, I think the more that we can provide tailored recommendations for what people need to save to have a successful and healthy retirement. A lot of that work today is very, kind of actuarial based, and I think to the extent that we can personalize that and give people plans that really meet them where they are in their current, in their life circumstances today, I see that as a massive game changer, because everyone's different. Everyone's got different family story. Everyone's got different financial circumstances, and I think the more data sources that we can connect to, and the more we can use that information to provide kind of comprehensive retirement plans, I find that really, really exciting and powerful.
And if you think about the future, I guess part of what you're saying is even today, we're doing much more than keeping the records. We're using that data to really help plan members and help advisors help plan members as well in terms of surfacing actionable insights, personalized recommendations. And the more modern your kind of data model is and way of storing and manipulating data, the easier it becomes to do that.
Yeah, I think that's exactly right. I think higher fidelity data, more accurate, more timely data really unlocks a whole host of possibilities for plan sponsors and for advisors.
So I want to make sure we have just a few minutes at the end for some questions. So if you've got any questions, maybe give that a little bit of thought. We'll open it up in a couple of minutes, and you can just drop your questions in the Q&A function. But maybe before that, we'll do a quick lightning round of the panelists. Maybe you could spend sort of 30 seconds or a minute to talk about maybe an area that you're most excited, to see technology create value and transform the industry. So Nicole, maybe we'll start with you.
Great. The retirement industry has been so focused on helping members save for retirement. So you end up with a pot of money and a 25 years, and then kind of what's next? And I'm really excited to, how can we look at research and predictive data and analytics to identify and understand the needs of members in this next stage, helping them think about what retirement looks like, that transition that we've talked to them about saving for so many years. Now, how do we talk to them about spending and what retirement looks like? So I love the idea of being able to build solutions using both technology and our strong advisor relationships to support what I call the retirement wellness of members. And this really delivers on our company's mission of a true plan for life.
That's awesome. The decumulation piece is super, super exciting. Phil, how about you?
I think I'm most excited about, I realize it's quite early, but the open banking initiatives that we're seeing in Canada and the ability to kind of accurately get meaningful data. It's ultimately data that belongs to the members themselves, and it's data that we can use to kind of provide them with important plans that are really kind of can be life-changing for some people. And I think open banking, open access to data, I find that stuff really, really powerful and really exciting.
How about you, Matt? I kind of echo Nicole to a certain extent. I'm really excited about what's being provided to the plan member. We've historically really focused on providing education and awareness in the context of the plan. And now increasingly, but that hasn't really solved for, we still have a tremendous gap in terms of financial literacy in Canada. There's a savings gap. Like, we're not fundamentally solving the key issues. And I think with the trends that we're seeing and the willingness for plan sponsors to actually have a more advice-based value proposition that's more personalized and contextualized to an individual specific need, there's an advice gap in Canada. Like people don't have access to advice. It's expensive. The traditional channels ignore you if you don't have enough assets. And so what's most exciting to me is that there's a potential opportunity to use the group retirement platform and really think differently about that, how we deliver advice to really drive meaningful outcomes. And then Nicole, you're right in terms of then wrapping your arms around someone as they move into that decumulation retirement stage. So I think it's really that holistic kind of financial wellness that as we move to these advice-based value propositions, that we can really start to hopefully address a broader set of needs and challenges that have existed in the market for a while.
Yeah, there's a survey we often look at from CIBC, and recently they found that 9 out of 10 Canadians feel they don't have a true plan for their retirement, which really underlines the advice gap you're talking about and the opportunity to serve people. So that's awesome. So we'll open it up for any questions that folks have. Like I say, you can drop your question in the Q&A just at the bottom of your screen. I see there's already a question that's coming because we haven't yet talked about cybersecurity. So the question is really, what trends are you seeing when it comes to cyber? Whether it's new plan sponsor requirements or regulatory changes. And I guess this could be a question for any of you, but maybe I'll start with you, Phil, since you led our SOC 2 Type 2 process recently, our accreditation. What are you seeing?
I'm seeing that more and more companies are being held up to a higher security standard from early days. It used to be that, these standards like SOC 2 and ISO were really things that you did if you were, doing business to business work, if you were a large enterprise, if you were dealing with a bank or an insurer. And I think that that expectation is really is being had of all technology vendors, no matter how big, no matter how small, no matter how early in the company's history. I think the expectation that a company is taking privacy really seriously, is taking data security really seriously, operational security seriously, I think that needs to be now embedded in the DNA of an organization. And it's a lot easier to do that when you know what the best practices are and you can build them into the fabric of your company from day one. Like we achieved the SOC 2 Type 1 just under 2 years ago when we were very, very small, and we've continued that journey. And that's allowed us to not just kind of get a piece of paper that says we're SOC 2 compliant, but to really build best-in-class security practices into our day-to-day operations work.
Nicole, Matt, anything you guys want to add on the cyber security question?
I'll add, I kind of say where we started in the industry was we were not really focused on user experience. And then it went to, oh, wow, we really got to focus, human-centered design on user experience. And now I find it shifting a little bit to here to say, okay, user experience is important, but not at the sacrifice of security. So we have to begin to think, we got to make sure we're always, maybe there's some little obstacles someone may need to go through to get from A to B, but sometimes that's because of security, and it's making sure that we consider those and that right balance.
I don't necessarily have anything else to add other than cybersecurity is one of the fastest growing practice areas in PwC. As we accelerate digitization efforts, modernization, it's going to be increasingly important, right? Like it's just the reality. So
maybe a time for one more question, and I might take this one. I can start, others can add. It's an interesting question. How about helping folks with goals other than retirement? Sabbaticals, time off for caregiving, part-time periods of work. Do you see an opportunity here? And it's a really interesting question. It kind of goes to, I think, Matt's point about personalization, right? We know that retirement is no longer a one-size-fits-all proposition, even just retirement, leaving aside other financial goals. So as I guess just in the retirement piece, as we think about decumulation and planning, we're thinking deeply about how we can meet people where they're at, which is probably not working to 65, stopping immediately, stopping at the exact same time as your spouse, and then having the exact same level of income throughout retirement. It's going to be a much more personalized journey. When it comes to other goals, we think if we think about the future of wealth management and the future of kind of digital advice, you've seen the rise of robo-advice, which has helped to automate things like portfolio construction and rebalancing. That's really sort of phase one. But what we're seeing now as part of phase 2 is built-in planning, right? We're trying to do that for retirement. But we think that that can be repeated for other kinds of goals as well, whether it's saving for education, saving for a house, saving for other needs. And especially when you're talking about someone who's not wealthy, embedding that in technology, it can be a really efficient way of helping a plan member or helping an advisor and a plan member to work together. Matt, I don't know if there's anything you want to add, any last words on that before we wrap up?
No, I think you kind of touched on it well. Like, the reality is saving for retirement is not a linear journey, right? Like, you have different stages of life that pop up that you need to potentially solve for first, right? Like saving for education, any sort of other issues, paying down debt, buying a house. And so what we see definitely is more of a holistic approach, a trend towards a holistic approach to helping people navigate the complexity of a non-linear journey in the context of their retirement.
Fantastic. Well, I think that's all, unfortunately, the time we have for today. We'd love to continue this, but just wanted to end by thanking you for joining us today. Really appreciate our panelists. A special thank you to Matthew for joining us as our special guest. You can see everybody's contact information on the screen, so please reach out if you'd like to continue the conversation. And we do hope that today's session gave you some tools and insights that you can use in your practice when it comes to the role of retirement technology. We have a lot more resources and tools to support you in serving your clients when it comes to these issues. So you can reach out to your Commonwealth rep anytime, and they would be delighted to help you, whether it's a platform demo, collateral support your client conversations, or just exploring creative ways to help grow your business. And also, please stay tuned for new product features as we continue to invest in making the platform better. You heard about how we're continuously improving things and the efficiency benefits of that. We just this week launched a mobile app that allows people to initiate a transfer in less than a minute, and that allows them to track their retirement readiness in real time. We're working on some very exciting stuff when it comes to guaranteed income, which will be rolling out very soon, and lots more in the months ahead. So that's it for now. Hope you have a great day. And again, thank you for joining us.